Hello, Warriors. Let's wrap up August with a bow. How about that? You with me, James? Glenn? Bran? Wrap the month. Hi, Sinatra. Hi, Blake. K-Man, Mike, Saloom, Papa. Okay. Um,
Hey,
Paul.
Dale, good morning. And guess
Hey.
what? We have actually Steve here today too.
Oh my God.
Yeah, I think he's
Sorry.
going to be here all week. So make sure you tap him for some commentary.
Okay.
All right.
I promise. Victor Negron, how are you? Marcus, everybody. Okay. Richard. Okay, let's go to work. So, still looking pretty good, isn't it, guys? At a pretty important resistance here. It measures if we get through here back to major resistance at the triangle up here. So we'll see what happens. I mean, they keep saying no one wants war, but isn't it strange? It keeps escalating. So we'll see. I think it's going to be what's going to drive crude is not going to be from the demand side. It'd be some type of supply issue. So that's looking pretty good. Getting to the dollar here, which, we're getting a little bit of a turn here. It got pretty close. Par 50 was one of the levels I talked about. And because the weekly moving average came in, I think right around there. Let's see. So you guys remember this chart? When we were here, and I thought that this might be a magnet down here and the major battleground setting up. So, I'm not going to do anything but, hold positions and think that there could be, maybe a rally sometime this week. Doesn't have, it could even take this out a little bit, but sometimes there's not always something new to do. You build positions and you have a hold on. So you're trying to hold positions. You could trail stops, or if you're, want to build the position, just sit and wait for reactions. And if there isn't, you're still there. But if we rally towards 102, 103 in the next week or so, that's a selling opportunity to me. And I think that's it. I think we could get a rally in yields, maybe. And if that's the case, I want to go to Cayman here. It has to look
Morning,
like it's
Dale.
trying.
Morning,
Good
everybody.
morning, buddy. I know you have some things to do, but it kind of has to look like could we put in a higher low here? Or do you think we're
Um,
just going to go for this
yeah, first of all, we have to know that we are like
month
end
end?
of month, right?
Yeah.
This week. So anywhere between Wednesday and Friday, we should see a bit of activity. Could be both sides actually. So
Yeah.
yeah, it is possible, but I wouldn't rule out we put in a bit of a fresh low perhaps towards the end of the week because
Okay.
the models are calling for quite a bit of dollar yen downside. Now, this being said, we know everything that's been said and done. The Japanese, Jackson Hole, we know everything. And I reckon, well, we have that low over there, but then I've got really decent level around 142.5. And I would like to really see, you were talking about sometimes it's you don't need to in have new positions or build on anything. And I think this week is one where when you're short, you should pay a bit of attention to that 142.5 into the end of the week if we get down there. Yeah, and in the meantime, we know how yen behaves. It's a volatile currency, and I'm especially thinking about Wednesday. Perhaps we could be even go back to 146 before seeing that low, because
Yeah.
now we know everything basically, right?
Yeah.
They Powell has given the market without going as far as giving the 50 BPs on a plate, but he gave the cuts on to the market. So I guess we are going to get dollar rally sellers, but give it a couple of days, I'd say.
Okay, so what do I do?
Here
Just
in yen,
wait, watch it, right? Just
uh,
watch it.
well, put a gun to my head. I'd buy a dip and then sell it on come Wednesday afternoon.
Okay. You know what's interesting, Kay, is that these look like real small candles, but
Yeah.
just from I was looking at it, said, well, you could buy it here and put a stop under the lows. But you're
Yeah,
talking
that's
about
about
over
300
100.
points. It's about 300
Yeah,
points away.
yeah, it's not a tight stop. It looks like it
No,
would
no,
be
no,
on
it's
the
not.
chart.
It's
So
not
I
because, yeah,
you got to
go ahead.
reduce leverage when you trade it now because of range expansion.
Well, I mean, trade it as an emerging market currency. Emerging market currency, we know it can have like 1, 2, 3% swings in a day. Well, dollar yen can have it right now as well.
Yeah,
Or any yen pair for that matter.
yeah.
Yeah, so yeah,
Okay.
well, that to me, we are going into like a two-legged week. And not stuff like gold or oil that's doing different things, but I think on the currency side, I'm not going to blindly sell dollars, even though it's everybody will want to sell any dollar rally. But I'm not going to sell blindly dollars for the first part of the week because we know everything and we still have a couple of things to take care of before the end of the week. But yeah, that for what our traditional dollar pairs are concerned, I would say I also wouldn't be surprised if we see risk do okay-ish, because who says yields coming off may underpin those the risk and thinking about stocks, thinking about like euro commodities also. But then you have a completely different side of the market, which is, as you already touched upon, oil and perhaps gold, metals in general should, in my opinion, remain quite well bid.
Yeah. Um, geo geo stuff, I think in WTI. So that that's a pretty good rundown of the market. Canada, Blake called that on Friday. He
Oh,
said, huh?
You did.
Yeah.
You called that move lower. That's extremely well done.
Thank you very much, K-Man. But on Friday, Blake said, we know Canada's declined quite a bit,
Yeah.
but it sometimes you just have to go with it
Mm-hmm.
because it could accelerate,
I've
and
tried.
that's exactly what happened.
Yeah, I tried it.
He's
I tried that 135.70, 136 level, and you know
Yeah,
what? It cost me 5 pips after power, and I'm more than happy.
yeah,
More than happy to give it a try. Get like a really close one. I didn't let it go to my stop. I actually just sold it out, and because power was a bit too dovish to hold any dollar up.
and we got pretty close. Here's my look in Aussie, and I'm going to turn it
Yeah.
over to Blake. This was just as good. I mean, here was, when I was telling people to buy
Uh,
in, and it was, I didn't know it. I slept through the drawdown. That was a crash day. But overhead significant stuff is right here.
eight and a quarter. To me, 68 and a quarter is really going to be important on the Aussie.
Yeah, there it is, 68 and a half. You look at it on the
Yeah,
weekly,
you
it's
have that
really,
as well then.
yeah, it's really clean. And, there are some moving averages above it, but, you know, it almost could be a little head and shoulders if you want to look at it that way, although, it's weird looking. But this has been containing it. So over 68.10, you know, you could head towards, into the 70s. So
Mm.
I'd buy pullbacks here.
And on the Kiwi, 61.5 has now, well, seemingly giving way. I mean, give and take 5-10 pips around it. But I think the Kiwi now, we need to watch 61.5 this week. If you get any move closer there, I'd suspect we find buyers there on the Kiwi dollar around 61.5, but that's like 50 points away.
Okay, Blake.
Well,
How are you today, man?
Well, K-Man, first of all, thanks for being here. I know it's a holiday in the UK, so it's really nice to have you here. But I know Greg is here. I know Steve is here. But before I, go to these two guys, I do have to point out though, I think the best looking dollar pair right now is I have to say it's sterling. I mean,
Yeah.
this is a really big breakout. And, K-Man, what are your thoughts here? Just asking you really quick, just because I know you play the Euro Sterling quite a bit.
I'm
This is a
short
big
still.
move.
I'm still short euro sterling. I think we are going to go back to those low 84s for a starter, and then see what happens. Yeah, cable is doing extremely well. I mean, barring a few weeks here and there, sterling has always been performing well in the whole situation. Even when it was trading those 123s, the cable, the dollar was still doing better there. But cable, I mean, sterling as a currency was never really extremely offered, right? It always tried to find levels to bounce back.
Yeah, I mean I think it's looking awesome. I mean, you look at this weekly chart. Obviously, we've got this big shakeout when we hit parity and the Liz Truss era reversal. And I mean, it looks like we're going at least to the mid 130s, maybe even higher than that, and maybe even thwarting a big long-term downtrend. I mean, that the sterling's been in. So I think it looks exceptionally well. I would not want to be short sterling at all. Matter of
No.
fact, I'm really not too comfortable being long dollars. I'm still playing dollar shorts. I think there's a lot of opportunities out there over the course of the next couple of days. Now, you said something that's interesting, K-Man. You said I wouldn't blindly short dollars this week. I
First
mean,
part of the week.
what's that?
First part of the week.
Okay, and I want to get a little bit more flavor on what you have to say there and reason why you have to say that. But I'll have to say that listening to Powell's, speech and dissecting it over the weekend, that's pretty dollar bearish.
Yep.
It really opens up the door for, I don't want to say aggressive cutting, but they're basically they basically say that they're not going to tolerate a weak labor market. Period. End of story. Like that's it. And so from here, I mean, if our jobs data at all starts to look anything like like even weekly unemployment claims, those start to move higher. Unemployment rate starts to tick up above 4.5%, something like that. The Fed could get really aggressive, and that's it. It's probably, I mean, you see what's happening in the dollar index just in general. It looks like things could really open up, especially if our data starts to really weaken. Do you have any thoughts about Friday's speech before we move on to Grega and Steve?
Well, I mean, I would tell the people to just listen to all the shows. I've been saying for a good while now that jobs are going to be much more important than inflation, and it's happening. And Powell is just confirming it. I mean, um, he was dovish. That is one. That is true. He was dovish, but he hasn't really said anything different than he said over the past 3 or 4 speeches. It's just the wording that got a little bit um, more of an acknowledgement to everything that is happening. We know that inflation is slowly on the way with bumps, but now the jobs market, I've been talking about that for so long. I mean, it's happening. So he's opening the door to cuts now. will he cut or will he need to cut 100 or something BPs this year? That remains to be seen. That is going to be the jobs market that is going to tell us. We've had the big revisions. That is now done. Now over to the next jobs report. If that confirms a slowdown, then I can see a dollar suffering even into year end, you know?
Yeah,
Okay,
and
so
so
dollar
go ahead.
suffering. I want to ask you guys something.
Mm.
So he's focused on jobs, but a weaker dollar, like everyone's talking about, could very easily translate into higher prices. It takes more
Oh yeah.
dollars to buy the same thing. So, you know, while he's focused on job, he's restoking the inflation problem with a weak currency.
But perhaps there is
Good.
your perhaps then the fact that they only will cut like 25 or instead of 50, you know. But I think for now the emphasis is on the jobs because they told
Yeah,
us all of them that inflation may be bumpy. So I think that the focus has
yeah.
shifted really over the past 2 months.
Sure, they want you to look over here while something else is going on,
Yeah.
Yeah,
right?
but the thing is as well, Dale, is that if they now and Powell told us as much because he said it already on the former FOMC that he's willing to support the market. So I mean, they even if inflation is a bit jumpy and it's probably going to take what couple of months to filter through that a weaker dollar is going to
Yeah,
spark higher prices in the data. In the meantime, they will cut because of the jobs,
yeah.
and
You're right.
that is somewhere supportive for all the rest
For
before
everything.
it may show up in inflation.
I mean, when the dollar's weak, what's going down? Nothing. Along the world is supporting the you know, everything bubble. A
Mhm.
weak dollar for now, right?
Yeah, I mean, if you really want to go into details, the only thing that could actually hamper really equity markets right now is that he says like, okay, we cut rates, but we are going to increase QT, and that would be a shock, but they won't.
Yeah, I mean,
So,
this is we all have to admit that the Fed put is on, and that's what's the scariest thing about like if you're out there trying to short equities right now, I
Yeah.
mean, good luck. I mean, good luck between now and the time we get a jobs report. I mean and that's the point I tried to make on the week ahead video this week is, you know, we got a couple of weeks before key data comes out, about a week and a half. If you're going to try to stand in front of the market just after Powell was so dovish, good luck with that.
Yeah, what
So,
a bear trap that was down there.
oh, it was huge, and this is, and I will admittedly say this, that the volume here, and I don't know where my volume went. I have to go. I don't know. I must have double clicked on it or something, and I'll put it back on.
Yeah, I
But
hate
I
when
bet
that
you the
happens.
breakout, if we get one in the S&P, which I'm assuming we will, is going to be on a lot less volume, and it's going to just be of more of the squeeze type, and then we'll have to look to see about sustainability. But let's bring in real quick. We haven't heard Steve's voice in a while, and love to get Steve's opinion about what's happening with what he thought about Jackson Hole and some of the comments that were made. Good morning, Steve. How are you?
Good morning. I'm good.
Hey, it's been a while. It's great to have you here. So what were your takeaways from the last, couple of days or price action or, anything that you heard over that really stood out regarding Jackson Hole or just some observations in general?
Yeah, a few comments of what has already been discussed here. If you remember before the previous jobs data, what I said was, let's see if we're going to be following the pattern, and the pattern has been very clear. The market is waiting for jobs data every month, and every month jobs data beats. And then the previous month's data gets revised down. That was happening for many, many months in a row. The previous month's data were revised down, but nobody cared about it anymore, right? Because, we had the new data to cheer for. Now they came out, and in essence, they revised down, going backwards for a year. And this is the second time I remember this happening during the past few years. they revised down on average every single month that has passed by 67, 68,000 jobs. That actually means that every single time, almost every single time the past year, the market was cheering a jobs data bit, it was a miss. Almost every single time. Now, I don't want to be a conspiracy theorist, but I
Go ahead,
think
be one.
that both the inflation data and the jobs data come out exactly as it is convenient to back up the narrative at any given time, right? They never managed to get inflation down. Dale said something, because I was being very careful, I didn't want to interrupt. Dale said something very, very important. Inflation, yes, reported inflation, yes, did come down substantially to roughly 3%, right? Just a reminder, 3% is 50% above target. I remind you that when the target supposedly was 2% and inflation was at 1.5%, right, that's 25% below target. That was a major issue. We had to do quantitative easing, we had to weaken the dollar, we had to do everything possible to fill the gap between 1.5% and 2%. We changed the target to being symmetrical target, supposedly, because that would mean that we would need to make up for the horrific loss of inflation of the past few years. What happened when inflation jumped to 9%? Did anybody start talking about symmetrical inflation targets, that we should start running negative inflation, that we should have disinflation for a few years to make up for the like 30-40% of purchasing power lost during the past 3 years? No. Now they're claiming, with inflation being 50% above target, that in essence, inflation was bit. Now, Dale said something very, very important. He said that the dollar was on the rise. And that's indeed the case. The dollar index rose for almost 30% from the beginning of 2021 to near the end of 2022. So a big part of inflation being more tamed was this appreciation of the dollar having to do with the US, right? Now, what's going to be happening once these gains are reversed? We're already seeing a partial reversal. What happens if we go a lot lower from there? We're going to have a Fed that now needs to show that there is a job issue, because there was always a job issue. We don't measure inflation honestly, and we don't even measure jobs honestly, right? Unemployment has been changed since the 90s. What was being counted as unemployed people back until 1994 is now in the U6, which nobody looks at, and now we have U3 that takes out of the equation tons and tons of people. So what are they going to be doing now? It's more than obvious. They're going to be focusing supposedly on jobs to stimulate the market, to stimulate the economy, and pretend that inflation is not an issue. So bottom line, what I'm trying to say here is that you should hear of what they're saying, because that's the most important part. Because don't worry, the data are going to come exactly as they want them to come to support the narrative. Now the narrative needs to switch to supporting the economy. So they're going to be focusing on, loss of jobs and inflation being under control. At some point, the narrative is going to change and it's going to be the opposite. So I'm not really worried about what we're going to be looking into the future. It's not a coincidence that they currently chose to go back and revise 1 year of data having to do with jobs. It's because they needed those revisions to back up the cuts that are coming, right? Which means that they've already made up their mind, and there is going to be massive inflation now in the older version, in the basic definition of inflation, meaning the increase of money supply coming in the economy.
Yeah, so you think that because of all this, it is going to continue to weigh on the dollar then, with this increase of money supply?
Now, Blake, For the time being, I think, yes, the dollar, I think the path of least resistance, we've been saying that in the morning edge, is lower for the dollar, higher for equities. Now, there is a caveat here, which is the following. I'm 1000% sure that the acceleration of purchasing power is going to continue. Now, it's all about the balance, right? One thing is for sure, every single currency will be losing its purchasing power faster again, because that has been happening for at least 20 years. Now, we saw an attempt to slow that down during the past couple of years, because even the cooked up reported inflation came out at, crazy numbers, right? So I don't expect that the dollar is going to be losing value on a month-on-month basis continuously, because other currencies will take the baton at some point. At some point, the ECB is going to lead again. The BOE is going to do so. But for the time being, I think the market is focused on the Fed. So I think that the dollar will keep losing value. At some point, I think we're going to see a stop being put to that, and other currencies are going to be weaker than the dollar. But have no doubt about this: all currencies will be losing massive amounts of value against anything that has intrinsic value, right? So expect gold, silver, real estate, ceteris paribus, that is, because yes, if we go into some kind of a massive recession, real estate is going to be gaining because of loss of purchasing power. But on the other hand, real estate might take a hit because the economy is going to go down, right? So ceteris paribus, considering that the economic situation is going to be the same, real estate is going to be appreciating as well. And anything with real value is going to be appreciating. So once again, I have to say that keeping your money in anything that is a currency or something that trades, denominated in a currency, is going to be a very, very bad idea.
Well, I knew you were a Bitcoin bull all along, Steve. So
Yeah,
there you
you're
go.
right. Yeah.
Hey, Steve, really appreciate your insights here, and I know we're going to be getting more analysis from you moving forward. So really nice to have you back here on F.A.C.E. Real quick, just because I know Grega is here. Grega, what are your thoughts about this move that we saw in the dollar and the S&P really quick? I know I'm going to pull up your charts as we go, but Grega,
Yeah.
let's start with the S&P. And
Yeah.
good morning, by the way.
Morning. Yeah, actually, this breakdown that we have seen into the end of the last week, I just think it just confirms in which direction we are currently positioned. So I think that risk on will resume. I'm quite surprised that we still didn't see much stronger push to the upside on equities, but I think that there's still buy a dip scenario there. Possibly we will rally into the start of the week on the dollar, as Cayman also pointed out. So I'm looking for potential lower supports on the S&P 500, and I would be looking to buy it on this wave 4 dip, as you can see on the chart. So,
All right.
I mean, the trends are pretty clear there. So definitely, I'm still very bearish on the dollar. I think that the US yields will potentially push out of the current consolidation. And in my opinion, this will make the whole situation even more into the risk on environment.
All right, and this wave count.
Yeah, that's the.
I was going to say we just wrapped up wave 3. I mean, obviously, the dollar is pretty oversold here. And that's the thing. It's like, yeah, you can't chase it down here. We got to work off some of these oversold conditions, which we now starting are. But you would be selling any rally that you see.
I just think that if we get this stabilization, maybe for the next 48 hours or maybe 24 hours, then this could possibly bring down stocks a little bit lower and give us a much better entries from that supports.
Awesome. All right. Very, very good. Grega, thanks for coming in and spending a little bit of time with us. If you guys don't know Grega, he does all the in-house analysis pretty much since we started. By the way, I know Dale knows this.
All the women know Grega.
All the women definitely know Grega.
He's like the Elvis of FX.
He is. And we're happy to have him here. And by the way, just Dale knows this. and he said it before. We're coming up on 8 years, guys. We've been doing F.A.C.E for nearly 8 years. We've had ForexAnalytix around that long since
How many shows? Do we know?
I don't know. Dale, I don't know. I mean, we have to go
let me go get my calculator.
Yeah, I would say 220 something, multiplied by 8. I mean, we're probably talking at least, 2000 show. Who knows?
We're like the Wall Street week of FX.
We've been around for a while, and we got some special stuff coming up over the next month for you guys as a result.
Oh, wow.
Special.
All
But
right.
I want to say Greg has been with us every step of the way. Well, almost every step of the way, because we brought him in like right at the very beginning, pretty close to. So Greg, it's always great to have you here. Make sure you follow him around on Twitter, and he's obviously he's participates with ForexAnalytix every single day with his analysis that you can catch.
Grega Horvat.
Yes. So even after this many years, you still look like a model, which is very frustrating for the rest of us mere mortals. Real quick before we pass it over to Dale, and I know Dale's got Dickie Matthews is in the house. Really quick,
I don't see him. Do you see him?
I don't. Maybe he didn't know it was a holiday. Well, I mean, he knows it's a holiday.
Well,
maybe he didn't.
yeah.
Did real. Yeah,
He's out swimming.
Is he raising his hand?
He's here.
I'm looking around. Anyway, real quick,
right.
K-Man, if you're still here, what are you have anything that you're looking at over the course of the next 24 hours or so while I look around here real quick?
No, not really. I mean, as I said, perhaps a little better still on the risk side. For the rest, no, not really. I'm happily still long a bit of gold, short zero sterling, and let the good times roll. And Richard Dickey is raised his hand.
Yeah, I'm looking for him right now. I don't know if
what name did he use?
He used Richard Matthews, but I don't.
Oh, he used Richard. Okay.
Yeah, but I don't. I'm still looking around.
I was looking under Dick, but I
see
see him.
He just posted a message on chat.
Yeah,
I got him.
He's got him. Okay, very good. Hey, Grega, how about you? Any big setups that you're looking at right now, like intraday?
Only the S&P 500 that I'm waiting on dips. That's my primary. And also maybe Aussie versus Kiwi. We will get inflation data on Wednesday from Australia. I think it has a pretty nice top formation there. We will see if inflation can get below 3.4%. It's quite big, lower expectations, but I think it can be quite volatile if numbers get around this or even lower.
All right, thanks, Greg. And Steve, I know you don't do any intraday trading, but anything that like really stands out to you right at this moment in time?
I love the title of your video. Don't fight the Fed. So you know what I mean.
Yep. Definitely don't get in the way of the Fed right now. It's going to be...
Don't get the way of the prior trends. They took a breather and they've now resumed. As simple as that.
If you look at like just from that spike low down here to these highs, and we're right at these highs. Look at that pullback. Isn't even. I mean, we're not even getting not even a 24% retracement. I mean, that's looks like we're just waiting to pop our head higher. I think the only thing that's causing a little hesitation right now is maybe some of the escalation in the Middle East. But the market's like, well, if it doesn't affect me. You know what I mean? Like that's the S&P's thought, well, it's not affecting me, then, it probably got to go higher. So it's going to be interesting to hear what Mr. Richard Matthews has to say about everything. So I'm going to pass it over to Dale. Dale, thank you so much. And K-Man, Grega, Steve, great to have you guys here. And thank you all.
All right. Thanks, team. Steve, nice to hear your another dissertation. I miss your voice. Someone says that you're the Greek guy with the Russian accent. And thanks, Kay. They did.
Greek guy with a Russian accent. Come on. Did you hear that, Steve?
He heard it.
You guys,
said,
that guys.
That Greek guy with the Russian accent. It's been a pleasure being
here, by the way, Dale.
Huh?
It's been my pleasure being here.
All right, buddy. All right, Grega, thanks for dropping in. Kay, as always. And Dick, how are you, buddy? How have you
I'm
been?
good. I'm good. I'm sorry you couldn't see me at first. I don't know what was going on. Hopefully
Yeah,
you can hear.
I was looking for you under Dick instead of Richard.
Ah,
Why don't we talk about what's happening here in the world? You know, in the
yeah.
markets, especially with a weaker dollar. Uh, do you think that this trend has staying power in the dollar? That you know, this breakdown that we've had is the beginning of maybe a multi-week, multi-month trend?
Yeah. Good. Good morning. And it
Good
is
morning.
actually in the UK today, so I'm in a very relaxed mood. First off, if Grega is the Elvis of the show, what am I? Am I the Paul McCartney or the?
You're Colonel Parker. Well, I'll have to ask Grega, but if you would like to be, you could be Colonel Parker.
Yeah, I think that's probably Little Richard, I suppose. Although I'm not so.
Right. Oh yeah, yeah. So I mean,
Anyway.
you know, these are big turns in the market.
Yeah.
So we've been moving sideways. This power area is kind of a battle zone, isn't it?
It's really interesting, isn't it? Because really, I don't think Powell said anything that surprising at Jackson Hole. I think he just confirmed most people's thoughts, and combined with, as the other panelists were saying, with this massive revision on the unemployment figures, I guess that gave the dollar a good kicking. And I am a bear of the dollar, and if Blake's still there, he's going to shrug his shoulders. I can't believe what I'm hearing. I actually quite like sterling up at these levels. I think
What?
good. Yeah, I know it's awful. it's the holiday. I hope that it's getting to me.
That's a nice breakout. Yeah.
Yeah. But I'll come back to sterling in a minute. But I actually don't think Powell said anything that we don't know. I guess it was as much the unemployment figures coming or being revised like that. My question is, what happens if those unemployment figures are so unreliable? How reliable are the inflation figures? Are you going to get massive upward revisions there? Question mark. I don't know. I guess there must be a slight worry about that. We are going to get a cut. I think Powell will be a little bit more cautious than people expect, unless non-farm, which is out a week on Friday, isn't it?
Yeah.
It's worse than expected. I think we'll only see 25 basis points. My gut feeling is that all the bad news for the dollar, the good news for the equity markets is already out there. What is going to follow? What's going to keep this trend going? Sterling, I think, is a separate case. I actually think that we are unlikely to see the Bank of England cut again as rapidly as people think, and maybe not again this year. We've just had a hike in electricity prices over here, and we've got quite large public sector pay rises going through as the Labour government pays back its backers, the unions, of exerting their power. So I think that you've got some inflationary pressures coming through in the UK, which will keep interest rates higher than anticipated. Hence, very simplistically, buy sterling, sell dollars.
Okay.
Will you see inflation come back in the States, and is it dead and buried? Yes, I don't know. What do you think?
About what, Dick?
Whether inflation's dead and buried in the States, or whether it's going to.
No, I think it's like the 70s. We just went through round one.
Yeah.
That over the decade there'll be another couple, to where, you know, just like there was in the 70s. They had to have a tightening regime more than once, and before Volcker got very draconian. I don't think it'll be a Volcker. It'll be the market just not wanting our debt, and rates spike, and just, you know, a lot of debt and no demand to get those kind of rates. But, you know, I wanted to ask you, you know, everyone's like, I agree with you in a way, but I mean, really, does the Fed lead the market, or did the market lead the Fed into this decision? I mean, we had a nice breakdown here. I mean, right here was 50 bips. Okay, this is 50. So the market set the stage for what Powell was going to do, right?
Yeah, absolutely. And it's really, being an old man, you know, you're
Yeah,
you
us
but
two old codgers.
we've both
Huh?
been block a few times. I looked at the
Yeah.
market. I thought this is really strange, right? So you've got bond yields dropping because we're heading into a recession. I
And you have
understand.
stock prices recovering because everything's okay.
Yeah. So, you know,
Which is right. I actually heard a guy that said the bond market's wrong.
unusual. You know, I mean,
Mhm.
going back to don't fight the Fed, don't fight the bond market. They both tend to be good maxims, but it does feel like one of them is wrong. And I just wonder whether equities have decoupled totally from reality, and they just look at liquidity in the market. And if the Fed's going to, you know, pump liquidity into the market, then you buy equities. I'm not
Or
recommending.
Bitcoin. You buy everything.
Yeah, yeah,
Everything. I mean, with the dollar going down, everything looks good. Gold looks good.
yeah,
The market looks good. Even
yeah,
WTI, which was left for dead, that's coming
yeah,
out of here.
yeah.
So
Gold,
I mean, it's
gold has been interesting though, isn't it? You know,
what?
is it telling us something?
The
Gold,
dollar?
no, gold.
Oh yeah, that there's a lack of confidence
Yeah,
in what's going on. So it's a store of value. It's same reason people are buying Bitcoin.
yeah,
Yeah,
yeah.
and it's down today, but you could almost
It's
make
kind
the case that
of,
it could go to 100,000 if
yeah.
we're going to have a melt up in equities again.
But are they really going to pump that much liquidity into the market? I think that, you know, as I started off saying, all the good news is in the market. I think now, you've got an election on November the 5th, our Guy Fawkes night, celebrating the ruination of Parliament in this country. Who's going to win? To me, it looks a lot closer than it did before Biden resigned as an outsider. And if Harris does win, what impact does that have? Question mark. I think if Trump wins, it's probably an easier play to work out what to do. But I think it's very hard to argue that neither of them will be inflationary for the markets, inflationary in their policies.
Both of them, yes, both of them.
Both
Either
of them.
Yeah.
Yeah.
Okay. Yeah.
So I think that's something which the market's totally discounting. And also, I still look at what's going on in the Middle East, and I know Blake's going to have a wry smile because I've been harping on about this for months and months and months. I think the markets are much too relaxed about that. I think they're much too relaxed about the impact on world trade that what the Houthis are doing and the Red Sea's doing. So I still see
You're talking supply chains.
Yeah, yeah.
Yeah. Okay.
You know, so I still see inflation coming back at some point in the not too distant future. But you don't. The market wants to do what the market wants to do. I just think that they've got ahead of themselves again.
Okay, so getting back to the Middle East, in your lifetime,
Yeah.
have you ever seen so much geopolitical risk in the world since maybe you were a little boy during World War II?
No. That's a bit harsh.
When you had to go through the Blitz in
Oh yeah,
London,
it was tough. It was.
do you remember how old were you then? When
the noise in the background to the Blitz when you're trying to trade those Germans, I just say, "Shut up, give me a break." I guess.
Anyway, Blake makes me even older than that. So
Yeah.
Anyway, so
but
yeah, I think what do you think of this, Dick? There could be, there are a lot of shorts in energy here.
Yeah.
Okay. A lot of, like you were saying, complacency about geopolitics and what's happening in the Middle East. If we get through 82, it would measure 113. How about an oil spike to probably even help the Fed's case because the consumer is already kind of stretched out.
Yeah.
So higher gas, they judge the economy by gas prices. So
Yeah.
could we? I mean, most people don't remember oil shocks. You have to go
Right.
back. That's 50 years since we had to deal with anything like that, right?
When I was first in the market, if you don't, it was my first deal.
All
72
right.
or 3, wasn't that the first oil shock?
In what, 73?
Yeah, I think
The
so.
oil embargo. Yeah.
Yeah. And I wouldn't bet against it, although the States is very self-reliant on oil. I mean, it hits the rest of the world. But again, I think you've got to look at politics. What's going to happen between now and November? Is it really going to kick off in the Middle East? It seems to be threatening and not really, famous last words, please God that it doesn't sort of escalate. But I'm really nervous of it. I can't remember a time when there's been so much geopolitical risk. And of course, that nice Mr. Putin's got a bit of a black eye and a bloody nose in the last couple of weeks. Is he going to just sit there and take that, or is he going to get deposed in something? Everyone assumes if Putin goes that you're going to go change a regime which is more friendly towards the West, but I think that's not nailed on. So I think there are so many.
So there's escalation there. There's escalation everywhere, in both wars. They are, I believe, Belarus is massing some troops, calling it military exercises. So maybe Russia. I thought by now he would have used a tactical nuke.
I've got to say I can't disagree with you. And Europe's got a war on its doorstep, and people seem to be ignoring that. I don't see that sort of in risk scenarios.
No,
particularly, that's what I find real strange.
I wanted to ask, if this is a longer term trend down in the dollar, and say cable has, the 140s in it, and euro has 120 in it. With the numbers coming out of Germany recently, that they're already weak, and they're a pretty big export-based economy, a stronger euro isn't going to be helpful, is it?
No, not at all. I mean, the German numbers this morning was it the IFO numbers came out that they're not good. You've had a really poor run of figures in Germany, and a strong. It's not going to help them, and I think that again, they are in a mess. I think their manufacturing's in a mess, but also I think that you've got to look at politics and what's going on in Europe as a whole. And despite what the UK swinging to the left of centre, electing a Labour government, Europe is more and more right wing and becoming stronger and stronger right wing and reacting to the immigration problems we've got. So I can see increasing political uncertainty in Europe. And don't rule out Russia interfering and Iran interfering in our domestic politics. I think there's a fair bit of that going on. So I feel very, very uncomfortable, I've got to say.
Yeah, it's like an anxiety level that's constantly out there.
Yeah.
Right. So
I don't know whether you're immune to that over there or not, but I mean, certainly in Europe, I think people are aware. But generally, I don't think they're as aware of the potential for something going really wrong as they were maybe back in the 80s here, when we genuinely did fear escalation from Russia and we did fear nuclear war, much more so than now. And I think people just think, it ain't ever going to happen, which is normally when it does.
Yeah. Okay. So anything, you a follower of Bitcoin? You have a view as a dollar alternative? This should be supportive of Bitcoin, a bear market in the dollar, right?
Yeah, I mean, I think that's absolutely right. And I think it is supportive. And I also think that easing a policy is supportive of Bitcoin. People look more and more to alternative assets. And I think there's a whole generation of people more sort of youngsters like Blake, who are fonder of digital assets than us old fogies. But I think, I'm a fan of Bitcoin. I'd be long at Bitcoin. I'd be long at gold, and cash.
Yeah. So that's one of the nicest looking bull flags I've seen in a while.
Yeah.
Right. So you have a flagpole from 15 grand to 75. That's 60. Breakout here is at 68. That gives you 128 Bitcoin.
Looks good, doesn't it?
That's just a measured move off this. Anyway, that's a crypto gift for people watching Dick and I today. And so you know, I don't know really where to leave it, Dick, except your business is important. And it's something we talked about before this happened, about diversifying out the dollar and stuff. So, you know,
I think
people should contact you.
Yeah, exactly. But I do, just before I go, I do think that there is this, whether you know, my mother is American. I'm always very, very proud to be half American, and I always support America when I can and stick up for America. But certainly when I've been in the broad stroke of a comment in the Middle East and talking to people in the Middle East, there is a definite feeling of people turning against the dollar and wanting to look at alternatives ways to do business. And increasingly that they are using Bitcoin to do transactions. And I think there is this, like, I hate the word de-dollarization, but I think there is a swing against the dollar, which can only help Bitcoin. I think they're wrong, but it can only really help Bitcoin.
Okay. All right. So Bitcoin has a lot of things going for it. President Trump owns $1 million worth of crypto, was disclosed. I don't know about the other side, if they own any, but I'm sure they'll support a CBDC. So I'm sure anyone who has power and wants more would support a CBDC. So that's you know, I always thought, and it is conspiratorial, people would call me conspiracy guy, that what better way to get Americans to accept something? First, introduce crypto, let them get used to it, right? So it's not a new thing. They, maybe they bought Solana or, some of these coins, and then have a problem with the dollar, like, going to 90. And that's like, another 10% loss, or even lower. And people knowing they're losing purchasing power because they're seeing, prices go up again, and them being more willing to embrace something that's sold as more stable and convenient, and you can't catch a cold or monkeypox or COVID from handling cash. What do you think?
I don't know about the catching COVID from handling cash. Well, there's a lot of COVID over here at the moment. I think that there is a whole generation of people who look at the States, and I don't just mean in America, I mean worldwide, and look at the amount of debt, and the numbers are just mind-boggling, and the constant devaluation of the currency just by the issuance of debt. Or is it $1 trillion every quarter or something? Just mind-boggling numbers. And I think people are starting to see that. And there's, you and I are brought up believing in the mighty dollar, but there's a whole generation who now question it. And I think that does help Bitcoin and other cryptos.
Well, I do too, for a while. I think that we could trade down here.
Really?
And maybe lower. Yeah. I mean, it's a measured move, right?
Yeah.
Right. Just cover it up, because it'll look radical if you know it's a dollar, but just cover up the chart. 114 for minus 14 minus 100. Actually down here it's like 88, 86.
And what's that do to prices?
It's got to make everything more expensive.
Yeah.
But the exporters in the US might be the place to be. And you know, it might be something like you would think, and I've been thinking this for a long time and have been wrong, that with the dollar weakening, besides silver, silver loves a bear market
Yeah.
in the dollar, but you would think that they might start looking at something like this. Something like this.
Yeah.
Something like this. You know, those grains are
Yeah.
pretty cheap.
But
So
I,
maybe China will come back. They've been buying elsewhere, you know.
I've got a friend who trades
Grains.
softs. He couldn't understand. He said he couldn't understand the differential between, I can't remember if it was corn and live cattle or wheat and live cattle, but live cattle was really, really bullish,
Yeah.
and corn and wheat were really, really weak. And there's sort of like no logic behind that.
Yeah. Well, I think it's supply of cattle. You know, a lot
Yeah.
of them get, yeah. And a good harvest. But the harvest isn't in yet. So we'll see. Looks like, you know, you have some basing action going on. That monthly was a little longer term, but it's a shot, don't you think? I mean, maybe buying some corn calls down here
Yeah.
or some wheat calls down here.
Is
You know,
is that a bet on the weather?
it's probably a bet on, I think China, you know, the world not buying a lot of our grain because there were weaker currencies. Now the
Right.
dollar's weakening. Um, you know, with the weaker dollar, they're cheaper than 960, right?
Yeah.
10% cheaper and
Yeah.
7% cheaper in the last few months, right?
Yeah. And of
Besides
course,
the
that's the
price.
impact of Ukraine.
Yeah.
Lingering.
Anyway, Dick, best way for people to get in touch with you when they, you know, want to talk about what's going on and talk currencies with you, best way for
Yeah.
people to do that.
I'm on Twitter with and my handle is @Dickie Matthews, but the S is actually a 5.
Oh,
Or you
okay.
can, or
All
you can
right.
or you can get hold of me through LinkedIn easily. I'm on LinkedIn quite a lot.
Oh, you
And
do a lot of that there. Okay, so
there I am.
here's Dick
There's
where you
my
can
yellow
find him.
submarine.
Look at that, the yellow submarine.
Yeah.
Oh,
Yeah.
the boys are down there.
Yeah.
All
It's
right.
a Lego yellow submarine. I
All
love
right, watch. I tell you what,
it.
you
Quite
brought, you know,
embarrassing.
I'm gonna go put my Beetle boots on now, bro,
Good man.
and my Beetle jacket. So, Dick, always great catching up with you and talking to you, and I hope we're wrong about what's happening in the
So
Middle
do I.
East. All right, brother.
Please God, we are, and I'll catch up with you all soon.
All right, Dick
Cheers
Matthews,
now.
everyone. Follow
Cheers.
Dick at Dickie Matthews 5 on
You got it.
X, and
Maybe a
check
yellow
it.
submarine is the safest place.
Okay, and you know, if you need to do some stuff overseas, need some help with payments, get in touch with him about this too. All right, well,
Fantastic.
thank you, Dick.
Cheers, Dale. Catch you soon. Cheers.
All right,
Bye-bye.
all right,
Blake.
everyone.
Bye.
Everyone have a great rest of the day. You could join the team in about 16 minutes on the Morning Edge. Good hunting, and don't just count your pips, count your blessings. Okay, you're very welcome, Laura, Marcus, all you guys, John. Fertilizer, sunspots. Yes, there are sunspots. All right. All right. Adios, everyone. Take it easy.